Good afternoon, traders. This is Christian from Extravagant Trader Group, and this is your end of day market recap for Wednesday, May 29th, coming from a very sunny New York City today. Downtown, really nice day, and look to be getting outside very shortly with this weather, and especially, after all the red on the screen today. What's interesting today, too, is, as bad as today was with the market breadth, which was pretty nasty, the move higher in interest rates, and the dollar moving higher. There was a lot of bright spots, I would say, in today's market too. But I'll get to that in just a second. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through in this video is for information purposes only. So one of the first things before we kind of get into some charts and talk a little bit about the bright spots and talk about today's price action, but just kind of interesting when you look at the 5-day price action at this point, and I'm looking here on the right side of the Excel sheet where it says 5-day, and you've got SPY, which is down 0.7 of a percentage, 0.7 of a percentage point, not a big deal. And of course, the Qs have been outperforming. They're up 7.5% for the month, but just for the last 5 days. 0.3%, but look at what's going on here with the mid caps, and I guess I don't have the Dow in my spread. For some reason, I thought I did, but the Dow has been pretty ugly, and I'm going to review that chart with you too. But the mid caps and the small caps have really been getting clobbered the last few days, down 3% a piece, and and only up, small mid caps, which are sometimes I think actually kind of lead a little bit what the small caps do, and sometimes even the large caps, they're only up 2.2% for the month. So not looking great. And if you go further down the list, of course, the ARK Innovation ETF. Holy cow! Again, I usually recap this at the end of the month, but sometimes I cheat ahead. I just start to kind of look to see how the month has been materializing. But you got the ARK Innovation ETF is down 17% year to date. That's tremendous underperformance, and is also down another 3.99%. The IBD 50 list, that's actually been hugely outperforming. That's up 9.8%. Perhaps they were long in that 50-day 50 company basket, probably a lot of AI type stocks and growth stocks, which have done very well. And also look at the difference between growth and value. Growth putting in a very big month, up 8%, and value only up 1%. That's pretty amazing, because I think you do go back to April, and I think value outperforms quite nicely. Small cap growth. So anyway, I'll do more of this recap. I always do recaps at the end of the month, and we've got a couple more days for that. Let's talk a little bit about today's price action. So I always have macro on the top line, but I think it's not always the most relevant or the most important thing to concentrate on, especially when, as I've been kind of going over the last few weeks, that bonds and the dollar really haven't been much to kind of worry about. They've been going sideways for the last couple of weeks. You kind of bite your tongue with that, because all of a sudden, we've seen a pretty decent move in bonds, and in the dollar really moved a lot today. That's the dollar ETF, and I should probably put this in red, because the dollar going up is usually bad for stocks, and that was up 0.5%. I mean, that's a decent move. So let's do that first. Let's talk a little bit about. Let's get some of the and I'm going to look at the dollar here. Maybe I could do this in Trading View. So if we do, I think it's the dollar. It doesn't know what it is. Well, let's do TLT first. So this is TLT. I know this chart's going to look busy to you, with the main thing here, and I'll bring up the weekly chart, because it's a little bit more straightforward, even though we don't have a full week's of data. But basically the pattern here has been just lower highs, right? So we've had these nice bounces. Notice where the last bounce stopped, right? So we saw this bounce basically for a good portion of May, up until this last week, and we've stalled. And yes, that's a lower high, so that's a bearish type pattern, and hence the trend line in here. But we also stopped right at that 91.73, which would have been a nice move back into the value area for the year, but that's a pretty good rejection, right? And a lot of times I get questions like, hey, how do you trade with the value areas? Well, that's basically it. You kind of watch what happens at a resistance level, and if price gets rejected there, that's that's a short. Here's the dollar. I'll just bring this up too. So of course that creates just a lot of implications when you have bond volatility pick up. It does create a lot of issues for equities. So here's what the dollar, like, so I don't think the dollar's like that bad, even though it was up decently. It's something that we certainly have to watch to see if there's continuation after a 0.5% day, but it's not anywhere near close to this yet. But if it does, again, quite simply, the dollar moving up is basically risk off. Yields moving up quickly is also a bit of risk off too. And this was a chart that I sent around a little bit earlier, which I'll kind of go through a little bit, but this is the way I kind of think about it. Some people they chart like what yields are doing, which I do, which is basically the yellow line here is what the 10-year yields are doing, right? So sometimes it's easier, because obviously bond prices and yields are, there's an inverted relationship, right? So obviously when bonds are going down, that means yields are going up. So when we just look at yields, right, just to kind of make this a simple comparison, I know it's tough to get your head around some of these concepts if you're not used to them, but so the yields are going higher. Now we're not above where we were basically in April, but this is rising. So what tends to do fairly well in this current situation is basically your big cap tech. And my reasoning behind why large cap tech does well is because they're not as exposed to higher when interest rates move like this, right? They, like Apple, for example, which is one of your top weights in the Qs, is not exposed to. They've already done their financing, right? They refinance like before interest rates, in terms of their debt, right? They also are sitting on a huge amount of cash, right? So they may actually be earning yields. So they're, they're fine. Now, of course, like if you want to be indirect, you could think about how it hurts their customers, higher yields. But as far as like their balance sheet goes, they're not going to be as impacted as, let's say, small caps, right? So what tends to happen in this environment, and we've seen this now a few times, right? So this isn't anything new, right? And you can kind of see what happened back in here when yields really went higher. It's the same type of concept. It's the yellow line. Yeah. So when yields were really ripping higher towards the end of last year, you could see what outperformed, right? The Qs did, right? And then all of a sudden when this happened, right? Because remember what happened towards the back end of the year. Mr. Powell came on, right? And it was one of the FOMC meetings, and he mentioned that they might have a chance to be cutting interest rates, right? And the yields went down, and so and small caps went up, right, versus the Qs. So so that's the relationship that's been playing out, and I think it's very easy. It's easier when you look at Qs over IWM, right, which is the white line, to kind of see what's unfolding here, right? So that said, let's look at a couple of these charts one by one, right? So when we look at IWM, for example, right? So, and it will kind of make sense if you look at IWM, which on the daily chart I want to watch here. And we'll switching back to the daily chart, right? So we're now inside that value area for May. Now, of course, we only have 2 more days left, so it now says bearish 80% rule, but I don't think that's going to play out in 2 days, right? You kind of have to understand when it says bearish or bullish 80% rule, meaning that there's a chance that price could go all the way through. I don't think it's going to do it in 2 days. So it doesn't really kind of take that in effect, and that's why it requires a human trader to interpret the bullish and the bearish 80% rule, right? Just like any trading system, it helps when there's a human to look at this. But yes, we're back below. We're right around where we bounced from back on Thursday of last week. Also, so let's look at the Qs too, so that you can kind of just, considering I gave this comparison. So the Qs have been rallying, but they're stalling here a little bit, but they're not going down like the small caps are. And that's the case of that relative outperformance Qs over IWM, and why it's doing so well is because the Qs, which were still down today, but overall, still above the value area for the month. And while it's losing the 5-period moving average, still above the 20 and the 50-day moving average. Here's the 20. And here's the 50. All right. I wanted to also go through and look at some of the other indices, because I think that this is also interesting, what's been going on in the diamonds, which have been basically straight down, well, somewhat straight down over the last like week and a half. So, there's no NVIDIA in this, right? So I've been talking about, even while I was on vacation last week, I was talking about like, hey, I was trying to throw like a red flag, saying, hey, be careful of breadth is really starting to break down, and we're starting to see some changes. And sure enough, that has really taken place. Now, of course, God bless NVIDIA's little heart. But that that really kind of stopped the halt from stopped the what was happening last week. Things started to kind of look sour last week, and then NVIDIA reported earnings, and some stocks in that group basically went through the roof. Right. And they talked a lot about AI, and of course that affects not just NVIDIA, but, anything that has to do with AI, including even some utilities. Right. So that helped all of those groups, and it kind of lifted those stocks. But it just seems like, if they hadn't reported, I think that we would be, even lower from where we are, and hence, maybe what diamonds are doing, which is, 30 stocks. But if you go one by one, and look through what some of the 30 stocks look like, they don't look particularly healthy, in terms of some of the moves that they've been having, right? And it's very easy. You could set up a screener in here, and if you go through, like, Apple's doing okay, but look at UNH, right? That's what I mean in terms of healthy, just big movements down. Home Depot has made a decent slide down. 3M, remember that big move up in 3M? That's all been kind of, down. Look at McDonald's, like that doesn't look healthy. Caterpillar made a lower high and has been breaking lower. Now, they didn't have the best earnings in the world, so I was actually surprised that they kind of hung in there as long as they did. Look at Visa come back down, after rallying a little bit. Johnson & Johnson, also, look at all the way back down in here. Even Travelers and even the insurance companies haven't been acting as well. Remember how strong they were for a while. Look at Disney, how bad that stock looks. All the way back to that gap. I think that's the earnings gap, but that's been basically over the last 2 months. That stock has been straight down. And I don't think maybe earnings was in here, but yeah, it looks like a pretty well-defined head and shoulders pattern that FinViz has in there. Walgreens, right? Merck even looks weak here. Multiple top, I think it's saying here, right? So I mean, look at Procter and Gamble move down. Now, some of these will be buying opportunities, into support. I think like Coca-Cola's in here too. Like that actually looks pretty interesting. But you could see that there's just a lot of them that are moving, down basically. Right. I didn't go over the S&P, which is what I usually go over first. I think what's kind of interesting here is that, again, like NVIDIA just kind of postponed the action here, from last week, and you can kind of see what I mean when we bring this up on the 1-hour chart. We're basically now, I think, under where we were. We're kind of right at where we were in terms of last week. All right. So, we've got some downside, and, tech is basically, holding things up here a little bit. Qs, I just wanted to go over that chart as well. I talked about this morning how the Qs triggered a bearish 80% rule, right? If you read my morning note, and by the way, you could check that out on Substack, right? I put out, just to kind of interrupt here, here's my Substack page. I know you can't read that, but it's ttgtrading.substack.com. I put out actually 3 notes a day. Why do I do that? Well, first of all, they're quick notes, right? The morning I give you what the indices are looking like, and I try to give you a warning of something like this, like the bearish 80% rule. And by the way, it's not, I mentioned, like, when this triggered, it was only about 1% down. So that's not the end of the world, to see that happen. And then we can kind of see if support, if that rule gets completed, which is about 40 basis points further to the downside, we can find out that if there's market support down there. All right, but I put that in the morning. Then in the afternoon, I talk about market dynamics, right? And one of the things with market dynamics has been, all right, it's ugly. So here's S&P 4-week new highs versus new lows. You've seen me post this a couple times. That, I mean, look at how many new highs there were today, right? Very, very little in the S&P. And I took this snapshot midday. It may be slightly different, the numbers, but I think you get the idea. I'm not trying to count to the exact number. There's like 10 new highs today and 164 new lows. And I can actually bring this up to refresh this a bit, but oops. There we go. And we'll do this. We'll wait for this. But yeah, so it was 12, right? So 12 highs, and Nvidia, Deckers, Netflix, Stryker, HCA, First Solar, RL, that's Ralph Lauren, T-Mobile, Take-Two, DVA, Western Digital, MRO, which there's a deal in that name, but that's 12, and then you have 177 names that are making new 4-week lows. So that means that you've got some major weakening that's going on. So I kind of think that's a little bit extreme to see 35%, but things could kind of get worse before they get better. All right, so just bear that in mind. But just to kind of give you a picture, there's a lot of things breaking down, right? And and here's what this looks like too, right? In terms of, and this is not updated for today, but you're going to see more new lows. Obviously, it's going to be as much as it's going to be. We're getting closer to where we were in April. I guess that was more extreme in April, and that's kind of where we started to kind of improve once we had a pretty decent washout in terms of breadth. We're not there yet. I would guess. All right. And then of course, like if you the Substack is very cheap, right? It's too cheap, I would say, but these are all the other things that you get, right? Any charts like in midday, I go over any trade setups in detail, right? And then of course you can see all open positions, and they're all marked to market because I use Bloomberg API. So this is kind of like, in my opinion, it's kind of like a gift. So I would subscribe for a month. There's a year special too that you can get a hold of too, but it's pretty cheap for what you get, because again, I try to make these things as well, like as quick, like about a 30-second read if you want to, and you can obviously spend more time with that, but I also give you an audio clip too that kind of tells you what's going on for the day. So if you're working and you're at lunch and you want to just like find out for 2 minutes what's going on in the market, this is a great way to do it. And then also I send the end of day note too, which has this video, and it has everything else in it too. All right, so I don't want to dwell on that, but so of all these things that are going on, right? They all sound negative, right? But the positive is too. I mean, there's definitely some positives out there. I mentioned some bright spots earlier, right? I mean, and this is pretty astounding. But Abercrombie and Fitch up another 24%. This is, I remember back at the end of the year, I said, what was one of the stocks that most surprised me? And I had Abercrombie on the list, and it's just continued to act well and do well. And it just shows that people are spending, but always with retail, they're spending selectively, right? The consumer shifts their behavior, right? Things go in fashion, things go out of fashion, or trendy and then not trendy. So, the consumer has always done that, but we're not seeing, in terms of like no spending going on. It's just selectively, right? And so pretty interesting. Dick's Sporting Goods was up 16%. So a lot of retail names. Now, I think there's a couple of retail names that are down after hours. Specifically, I think AEO is down, right? Look at Pure Storage is up 7% here. At least I saw it down earlier, but I don't see it on the list anymore. Yeah, so that's what you have in terms. You've got some names up here post market. Down in the after hours, that's a big move in Salesforce, down about 17%. My thought on the software group, and I've said this for a while now, is I just think that there's too many software names out there. There's so many names that do the same thing, that automate tasks and so forth, that in my opinion, you don't need 100 of these companies, right, that are all doing basically almost the same thing. There's not a lot of differentiation. I don't know if you're a small business owner, you probably know what I mean, but you could automate tasks with so many of these different things. In any event, I find it interesting. All right, bottom line, a couple other things that I was going to review in this video. And here's just a snapshot of the sectors. The ones that are only showing strength at this point, of retail, which we already covered, and the semis still. So where does this kind of leave us? And am I getting super negative about the market? No, I would just say, we've had a really nice month. As I went over some of the performance in this month, May, it's been very strong. But let this if price comes in here, and again, there'll be a new value area for the month of June. But let's just say the 20-day moving average, right? Price comes back in here, you're going to start to see a lot of good setups again. So I would be patient. I think I have just about like 100 names on the earnings watch list. I think you're going to find a lot of good setups once we get maybe, and I would be welcoming at this point a little bit more downside action. Let this market get a little bit washed out, let the sentiment kind of come in a little bit, and I think that you're going to get some good buying opportunities. Now, again, end of month, this is sometimes what happens, right? Sometimes you get a weak end of month, and then new money gets put to work in the beginning of the month. So the reason why I kind of go over these videos and the breadth and all of that, and interest rates, is to just so that you could try not to kind of give back some of your profits that you made earlier in the month by doing the same things, right? The market is always about making adjustments and not doing the same thing on every day, right? That's not a recipe for success. Another thing that I would point out too is that Friday you have the PCE deflator. Now we don't know, of course, we don't know what, I think most people, unless you're privy to some information or you're calculating data points in terms of inflation, but you've got the PCE deflator on Friday, right? That number comes in lower, right? You might start to see buying pick up again, right? Even though it's the last day of the month, right? So again, run a scenario analysis. If this number comes in 0.4, 0.5, right? You might see more of the sell-off kind of pick up a little bit. But if this number comes in at 0.2 or 0.1, you're probably going to see a pretty decent snapback rally in something like IWM. So you got to stay on your toes and realize that we're going to have some big data that's going to come out on Friday, and that's going to kind of set the tone for going forward in terms of if this is this little dip that we're getting, if this is a buying opportunity, or if we might have a little bit further to go to the downside. So let the data kind of help and be your guide, and have a list of things that you're looking at. You don't always have to play single names. You could play the indices, and I will probably be playing IWM if that number does come in light. So we'll go from there, guys. Have a great night. See you tomorrow.